Welcome to the deep dive. This is where we take that stack of source material you've shared, articles, financials, news notes, and really sort of dig in.
Yeah, pull out the essential knowledge.
Exactly. Our mission is simple: give you the crucial insights, those aha moments, and just enough context so you feel well-informed, fast.
Think of us as guides, navigating the info overload. We're here to help you understand what really matters in the stuff you've put in front of us for this deep dive.
Right. And today we are diving deep into a real giant in healthcare, UnitedHealth Group. Ticker is UNH.
Big one.
Huge. And the sources we've got cover, well, everything. Their core business, market position, recent financials, risks, and quite a bit of breaking news from just the last 6 months or so.
It's been eventful for them.
Yeah.
So our mission here is to really unpack UNH. What makes them tick? What are these big challenges and opportunities they're facing right now?
And what do the financials and the rest of the material actually tell us about their health and, well, where they might be headed?
Let's get into it.
All right, let's unpack this. Looking at UnitedHealth Group, fundamentally, the sources immediately point to this dual structure. What are the two main parts we need to understand?
Okay, so at its core, UNH is built around two big complementary platforms. You've got UnitedHealthcare, that's the health benefit side. The insurance arm.
The part most people know, probably. Health plans for individuals, employers, Medicare, Medicaid.
That's the one. But then there's the other side, Optum. And the sources really emphasize how increasingly important this side is.
Optum. Okay, so what exactly is Optum? It's not insurance.
No, it's their health services segment. It's less about paying claims and more about using tech, data, and integrated services across the whole healthcare system. And Optum itself has like three main parts.
Okay.
There's Optum Health, that's about direct patient care, value-based care models. Then Optum Insight, that's the tech, the data analytics, consulting for hospitals, other payers.
Right, the tech backbone.
Pretty much.
Yeah.
And finally, Optum Rx, that's their huge pharmacy care services, and PBM, the pharmacy benefit manager.
Wow. So they're not just insuring people. They're providing care, managing drugs, selling tech services to the industry. That feels way broader than just an insurer.
It is much broader.
And I saw something in the materials about their mission statement changing. Does that tie in?
It does, yeah. It's quite telling. It used to be simply to help people live healthier lives. Now it's helping people live healthier lives and helping make the health system work better for everyone.
Adding that second part, make the health system work better.
Exactly. That signals a much bigger ambition, right? To influence and, well, improve the whole system. And Optum's capabilities are key to doing that.
And this dual structure, UnitedHealthcare and Optum together, the sources describe it as creating this powerful synergy. That's a big part of their edge.
Absolutely. That integration is like central to their whole strategy and competitive advantage, according to this material. I mean, think about the scale the sources mentioned. Over 51 million UnitedHealthcare members.
51 million, that's huge.
It is. And that gives them a massive data source insights into care, costs, what works. And it's also a built-in audience, you could say, for Optum services.
Okay, so the insurance side generates data, insights, maybe even customers for Optum.
Exactly. And then Optum's capabilities feedback. Optum Health's care models try to improve outcomes and manage costs better. Optum Rx uses its scale to negotiate drug prices. Optum Insight crunches the data
to find efficiencies and trends.
Right. It all gets integrated back into UnitedHealthcare's operations. It's supposed to be this feedback loop, improving care, member experience, and critically managing costs. That vertical integration makes them really different.
Yeah, you can see how that would be powerful. Connecting the insurance insights with the service delivery and the tech. Okay, just the basics. HQ in Minneapolis trades on the NYSE, ticker UNH.
Correct. Foundational details.
Now, shifting gears a bit, one of the biggest and honestly pretty surprising pieces of recent news highlighted everywhere was this major leadership change just in May 2025.
Yeah, that was big. The announcement that Andrew Whitty was stepping down as CEO effective May 13th, 2025. And Stephen J. Hemsley, the former CEO, is coming back.
Stephen Hemsley. Yeah, that name rings a bell from, a decade ago? He was CEO from 2006 to 2017, right? With the company since 97?
That's him. He is president and COO, too. So his return brings back someone with, incredibly deep institutional knowledge. He led them through the '08 crisis, the ACA rollout.
Major periods.
Right. And the sources frame his return as happening during a really turbulent time for UNH. Stock's been down, guidance revised. Lots of external pressure.
So the thinking is bring back the veteran hand to navigate these rough seas. Is that the read?
Well, companies always spin these things positively, but the timing, it really lines up with all these operational and regulatory challenges becoming much more visible. It strongly suggests a move for stability for an experienced leader.
Makes sense.
And Hemsley's background, he was CFO at Arthur Andersen before UNH, suggests a very analytical, financially disciplined style, probably seen as what's needed with the current cost and margin issues.
And there's a governance point the sources highlight too. Hemsley is also staying on as chairman of the board.
That is notable. Combining CEO and chair can allow for quick decisions, maybe good in a crisis, but it definitely concentrates power.
Raises those classic governance questions, right, about independent oversight.
Exactly, especially when the company is facing performance issues, investor scrutiny, these big regulatory investigations. It's something people will be watching very closely.
Okay, let's zoom out. The U.S. healthcare market UNH operates in, it's just vast.
It's enormous. And the sources give some sense of growth rates. For their core areas like managed care, health insurance generally, the projections are pretty stable, around 6% compound annual growth rate, give or take.
Okay, 6%. Steady, not spectacular, but a solid foundation.
Exactly. A stable base. But where it gets interesting is comparing that to the segments aligned with Optum.
Here we go.
Yeah. U.S. Care Management Solutions market, projected CEGR is like 14.1%. Healthcare Information Systems, almost 12%.
Whoa, okay, 14% versus 6%. That really puts Optum in the spotlight as the growth engine, doesn't it? That's where the faster expansion is expected.
It absolutely does. Placing Optum in those higher growth tech and service niches is clearly fundamental to their strategy. They need that growth beyond just traditional insurance.
And even if the exact market size numbers vary source to source,
the overall theme is consistent. Positive growth overall, but significantly higher rates in those Optum areas.
And who are they up against? Who are the main competitors?
Well, based on market cap and revenue in these sources, the top 3 direct competitors listed are Elevance Health, the Cigna Group, and Centene Corporation.
Yeah.
Humana is also mentioned as a major force, especially dominant in Medicare Advantage.
Right. But when you look at the sheer size, the numbers, UNH seems to be in a different league compared to those peers.
The data really shows that. Their market cap, their revenue, substantially larger than Elevance, Cigna, or Centene. And that scale brings big advantages.
Like
economies of scale, obviously. More negotiating power with hospitals, doctors, a wider network, which makes their plans more attractive. Scale matters a lot in this business.
Which brings us to their competitive moat. The sources use that term. How strong is UNH's moat considered?
Yeah, the moat is that defensibility, what protects profits long term. Guru Focus, for instance, gives UNH a wide moat score, 9 out of 10, calls it clear and robust.
9 out of 10, that's pretty strong. What builds that moat? What are the key factors?
It's a combination of things, according to the sources. Their market leadership, just being the biggest. Powerful network affects more members, makes the network more valuable, which attracts more members.
A virtuous cycle.
Right. Strong brand. Durable cost advantages from that scale, especially Optum Rx buying drugs in bulk. Then there are significant regulatory barriers. It's hard for new players to just jump in.
True. Healthcare is complex.
Very. Plus a huge distribution network, some pricing power, and ongoing innovation, mostly driven by Optum's tech and data focus.
So that Optum integration we keep coming back to, that's like a core part of the moat structure itself.
Absolutely critical. The sources really hammer this point. The synergy is a core component. Optum Rx lowers drug costs. Optum Health pushes value-based care for efficiency. Optum Insight uses data to refine everything. That whole integrated model is hard for competitors to copy.
But you mentioned regulatory barriers being a double-edged sword. How so?
Well, while the complexity keeps new entrants out, it also makes UNH highly dependent on government rules and, crucially, vulnerable to changes, policy shifts, reimbursement rate cuts, increasing scrutiny, investigations.
So the thing that protects them also makes them vulnerable in a different way.
Exactly. And the sources directly link this dependence to the pressures they're facing right now.
Okay, let's pivot to the financials. How is this translated into actual performance over the last few years, say 2022 to 2024? All
right, income statement first. Revenue looks consistently strong. Grew from about $324 billion in 2022, up 14.6% in 23, then another 7.7% in 24, hitting $400 billion.
Solid top-line growth year after year, over $400 billion in revenue.
Definitely growing the top line. But the bottom line, net income, that's a different story, especially in 2024. Net income attributable to shareholders grew nicely from 2022 to 2023, up about 11% to $22.4 billion.
But then in 2024, it dropped sharply? down 35.6% to $14.4 billion.
Whoa, hold on. Revenue up almost 8%, but profit down over 35% in 1 year. That's stark. What happened? Why the huge hit in 2024?
Yeah, the divergence is the key point. Two main things the sources highlight. First, a big jump in their medical care ratio, the MCR.
MCR, that's the percentage of premiums they pay out for medical claims, right?
Exactly. It went from 83.2% in 2023 up to 85.5% in 2024. So a bigger chunk of every premium dollar went out the door for care. That directly squeezes profit.
And why did the MCR jump like that? Sources attributed to things like changes in Medicare funding, shifts in their member mix, maybe sicker patients, and also the timing effects of states restarting Medicaid eligibility checks after COVID pauses.
Okay, so rising medical costs. What was the second factor?
The other big hit in 2024 was a large one-time charge, an $8.31 billion loss on sale of subsidiary and subsidiaries held for sale.
Okay. That explains a big piece of that 35% drop. It wasn't all ongoing costs. But still, the rising MCR is a concern. Did that trend continue into early 2025? What did the Q1 prelims show?
Well, Q1 2025 prelims showed revenue still growing, hit almost $110 billion. But alongside that, they announced a significant downward revision to their full-year 2025 earnings guidance.
Downgraded guidance already. Why?
They specifically cited, and this phrase keeps coming up, heightened care activity indications within their Medicare Advantage business.
Heightened care activity. Sounds like code for costs are going up faster than we expected.
That's exactly the implication. It suggests those cost pressures, especially in that key Medicare Advantage segment, aren't just sticking around. They might even be accelerating into 2025.
Not good. Okay, shifting to the balance sheet, assets and debt.
Both grew consistently from 2022 through 2024. Total assets went from around $246 billion to nearly $300 billion.
And debt load.
Total debt also increased, and there was a notable jump in 2024, over $14 billion added, bringing the total to about $77 billion.
Why the big jump in debt in 24? Acquisitions.
Well, the big Change Healthcare deal closed before that, but companies take on debt for lots of reasons. The sources do mention UNH has ongoing share buyback programs, which can be funded by debt. It definitely increases leverage, something to watch.
Let's look at key ratios. Return on equity, ROE, current ratio, debt to equity. What do they tell us?
Okay, ROE was strong around 25.5% in 22 and 23, but just like net income, it fell sharply in 2024, down to 15.0%.
Direct reflection of that profit drop. Makes sense. Current ratio.
That's current assets over current liabilities. It's been consistently below 1.0, around 0.8 or so. That's actually pretty typical for health insurers. They have large liabilities for future claims.
Okay, not necessarily alarming on its own.
Not necessarily, but it's worth noting in the context of their cash flow from operations, which also dipped in 2024, down to $24.2 billion from $29.1 billion the year before.
Lower cash flow too. And net to equity.
That ticked up in 2024 to 0.78, reflecting that big jet increase we saw. So you put it together. In 2024, ROE went down while debt to equity went up. That suggests the increased leverage didn't boost shareholder profit that year, likely because of those severe margin pressures.
Yeah, that 2024 picture plus the Q1 25 warnings, it definitely paints a picture of significant headwinds. So how is the market valuing UNH stock amidst all this as of, say, late May, early June 2025?
All right, valuation ratios. The price to earnings, or PE ratio, is sitting around 12.5 times earnings. Price to sales, PS, is about 0.67. And enterprise value to EBITDA, it's in the range of 7.6x to 9.0x, averaging about 8.3x.
Okay, how does that stack up against competitors like Elevance, Cigna, Centene?
Compared to the peer average, UNH's PE is lower. 12.5x versus about 14.8x for the others.
A discount on earnings. Why?
It most likely reflects all this recent uncertainty, right? The CEO change, the suspended outlook, the investigations, those weak 2024 results, the cloudy 2025 picture. The market's nervous about current profitability.
So discounting current earnings due to the noise. But what about the price to sales?
That's where it's different. They trade at a significant premium on PS, 0.67x versus only about 0.34x for the peers.
Much higher on sales. What does that suggest?
It suggests the market still highly values UNH's massive scale, its market leadership, and probably the sheer revenue-generating power of Optum. They see that integrated model as different, more valuable on a revenue basis than pure-play insurers.
Interesting. So a PS premium, but a PE discount tells a story, doesn't it?
It really does. The market likes the size, the revenue potential, the Optum story, but it has real concerns about their current ability to turn that revenue into profit reliably, given all the challenges. EBITDA is roughly in line, maybe slightly higher than peers.
Could that low PE be an opportunity, though, if these problems are temporary?
That is the multi-billion-dollar question, isn't it? That 12.5x PE is way below their own 10-year historical average, which is more like 22x. And it's a big if, they can navigate this storm and get back to that long-term EPS growth target they talk about, 13-16%.
Then the multiple could expand quite a bit from here.
Potentially, yes. That's the bull argument.
Okay, let's pull back to the strategic overview. SWOT analysis. Key risks. What's the core strategic challenge facing UNH right now based on these sources?
A main strategic challenge seems to be, how do they leverage their big strength scale, Optum innovation, to grab those future growth opportunities like digital health, AI, value-based care, while also fighting off these major weaknesses and threats?
And those main threats and weaknesses are?
Primarily, it boils down to that heavy dependence on government programs. Medicare and Medicaid are, 62% of revenue, according to one source?
That's huge.
It makes them incredibly vulnerable to regulatory changes, funding cuts, political wins, and all the scrutiny and investigations that come with it. And as the 2024 numbers showed, just managing basic medical cost trends is a huge ongoing challenge itself.
The Change Healthcare cyber attack is also flagged as a major threat.
Massive threat, huge operational mess, big reputational hit. Interestingly, though, some sources hint it could become an opportunity, maybe, if Optum Insight emerges as a leader in healthcare cybersecurity solutions because of this. Turn lemons into lemonade, perhaps?
A potential silver lining, maybe. What about the top 3 specific risk factors the sources really emphasize?
They're very clear. Number 1, the biggest, is changes in healthcare laws, regulations, and government programs. That 62% revenue dependence makes them super sensitive to any shifts in Medicare, Medicaid, ACA, funding, rules, audits, everything. And those ongoing DOJ investigations into Medicare Advantage. That just ramps up this risk massively.
Seems like a fundamental vulnerability just baked into their business.
It really is. Risk number 2 is the effective management of medical costs. Profitability hinges on predicting and controlling healthcare costs. The sources directly link the higher MCR in 24 and those heightened care activity warnings in 25 to this risk. Things like people using more services, new expensive drugs or tech, aging population. It's complex.
And the third key risk?
Cybersecurity threats and data privacy breaches. They handle unimaginable amounts of sensitive health data. Optum Insight and Change Healthcare are critical infrastructure. They're massive target. A breach means chaos, fines, lawsuits, loss of trust.
And the Change Healthcare attack in February 24 is the poster child for that risk becoming reality.
Exactly. A stark, painful example.
And the sources note these risks aren't isolated, right? They feed into each other.
Precisely. They're interconnected. A policy change could drive up medical costs or trigger an investigation. The cyber attack led to regulatory scrutiny, lawsuits, reputation damage, which could impact member growth or cost management down the line. The DOJ investigation links regulatory risk directly to the Medicare Advantage business, which is also facing cost pressures. It's a complex web.
Okay, shifting to their growth strategy and outlook. Despite all these storms, what are they saying they're focusing on for future growth?
Their stated strategy hits on 5 main priorities. Care delivery, especially value-based care via Optum Health. Health benefits innovation. Health technology, think AI. Analytics via Optum Insight. Health financial services. And pharmacy services via Optum Rx. Plus, trying to make the consumer experience simpler, better.
And they still have that ambitious long-term earnings growth target.
Yeah, they publicly state an objective of 13-16% annual EPS growth over the long term.
That feels optimistic given the current environment. How much does hitting that target depend on the Optum side performing well?
Hugely reliant. The sources really stress this. Achieving that 13-16% explicitly relies on Optum Health, Insight, Rx continuing to execute successfully and contribute significantly. They need Optum's faster growth and innovation to pull the weight, especially if the traditional insurance side faces slower growth or margin pressure.
So with all the recent issues and the suspended outlook, what are analysts forecasting for the near term, specifically for fiscal year 2025?
Well, the analyst consensus for FY 2025 EPS as of late May, early June is now hovering around $23 per share.
$23? How does that compare to earlier forecasts?
It's a major downward revision. Earlier forecasts were up around $29 to maybe $26. So $23 implies analysts expect a year-over-year decline in earnings for 2025.
Wow. So despite the long-term 13-16% goal, analysts are actually projecting earnings will fall this year.
Correct. It starkly highlights just how severe these near-term headwinds are perceived to be. And remember, UNH's own last guidance from April was $26.50 adjusted EPS, but they suspended that in May. So analysts are even lower than the company's withdrawn number.
That gap between analyst views and the company's last suspended view is telling. What about revenue for 2025? Still growing.
Yes, that's the interesting contrast. Analyst consensus for FY 2025 revenue is around $451 billion. That actually implies pretty strong double-digit growth from 2024, maybe close to 13%.
Okay, that's fascinating. Strong double-digit revenue growth projected, but an actual decline in profit expected.
Doesn't get much clearer than that, does it? It screams severe margin pressure. They're expected to get bigger, bring in more money, but struggle to make more profit from it in the immediate future.
The sources really paint the last 6 months as just incredibly turbulent for UNH. Let's quickly run through the key recent news items that created this perfect storm environment.
It's been intense. So May 2025, we had that sudden CEO transition, Woody out, Hemsley back in, and crucially at the same time, UNH suspended its 2025 financial outlook.
Right, and the reason given was
Accelerating medical costs, that heightened care activity in Medicare Advantage again.
So the day they change CEOs is the day they say, we actually can't forecast earnings right now because costs are rising too fast. That's a bad signal.
A very bad signal for market confidence, yes. And that followed April 2025, when they'd already reported disappointing Q1 results and already cut their full-year guidance, once citing the same Medicare Advantage cost issues. That earlier cut reportedly wiped billions off their market value.
So the Medicare Advantage cost problem seems central. And then on top of that, the DOJ investigation news broke.
Yeah, reports in May-June 2025 that the Department of Justice opened a criminal investigation into UNH's Medicare Advantage business, looking into potential fraud. This came after earlier reports of a civil inquiry and a broader probe into the UnitedHealthcare Optum relationship.
A criminal investigation that elevates the regulatory risk significantly.
Absolutely. Potential for much more serious legal action, bigger penalties. And of course, hanging over all of this is the massive Change Healthcare cyber attack from February 2024.
The fallout is still going on.
Still ongoing into 2025. Widespread disruption across the whole U.S. healthcare system. The former CEO even admitted in testimony that the specific portal breached lacked multi-factor authentication, MFA. Basic stuff.
Oof. Which naturally led to lawsuits, right?
Dozens of them filed against UNH related to Change Healthcare. And then, adding to the pile, May 2025 saw reports of a shareholder lawsuit alleging the company misled investors after the death of the UnitedHealthcare CEO Brian Thompson.
Another lawsuit.
And around the same time, separate allegations surfaced about potentially improper payments to nursing homes, also tied to Medicare Advantage patient transfers.
Wow. Okay, just to recap the last few months. CEO swap, suspended guidance due to costs, after already lowering guidance, reported criminal DOJ probe, massive cyber attack, fallout still happening, shareholder suits, other allegations. That is a lot.
It's an incredibly difficult period. This rapid-fire series of negative events is what created that perfect storm feeling, severely shaking confidence in UNH's reputation for stability.
And the fact that Medicare Advantage keeps popping up costs, investigations, allegations, seems particularly worrying since it's supposed to be a key growth area.
It is a central concern, absolutely. And the Change Healthcare attack throws a spotlight on cyber risks within Optum Insight, and maybe raises questions about integrating these huge acquisitions smoothly, especially under pressure. This whole messy situation is what the returning CEO, Stephen Hemsley, is walking back into.
Let's quickly touch on management and governance again. Hemsley's background, ex-Arthur Andersen CFO, and his dual CEO chair role.
Right. His background points to that strong analytical financial focus, which the board probably thinks is crucial right now. The dual role, again, potential agility, but ongoing governance questions about oversight, especially now.
Who are the big shareholders watching all this unfold?
The Vanguard Group is listed as the largest institutional holder, around 10%. BlackRock is also a top holder.
Big institutions means sophisticated investors are paying close attention.
Definitely. Typical for a company this size. But it also means significant pressure on management to perform, address the stock drop, and show strong governance through all this.
And ESG performance, how do the sources rate them?
It's a bit mixed. Sustainalytics gives them a low risk rating, which is generally good for their sector. S&P Global has them at 44 out of 100 overall. Their environmental and social scores are decent, but their governance and economic score is noted as slightly below the industry average.
And you'd have to assume recent events, the cyber attack, the investigations, might impact those social and governance scores going forward.
You'd think so, yeah.
Yeah.
Data privacy is key on the social side. Investigations, compliance, leadership structure, that's all governance. How they handle and report on these issues will be critical for future ESG ratings.
Okay, let's try to synthesize all this. Based on everything in the source material, what's the core debate here? What's the bull case versus the bear case for UnitedHealth Group right now?
All right, the bull case. It argues UNH is fundamentally strong, market leader, unmatched scale, that powerful Optum UnitedHealthcare synergy, wide moat. The recent problems. Bulls see them as temporary headwinds, cyclical pressures. Maybe the stock drop creates value. They point to the experienced returning CEO, the long-term growth opportunities in tech and value-based care via Optum.
So the bulls basically say they're huge, they're diversified, they'll weather this storm.
That's the gist. The bear case, though, focuses on how deep and interconnected these problems are. Persistent, maybe worsening margin pressure from medical costs, especially in Medicare Advantage, huge legal, financial, reputational risk from the government investigations, the ongoing fallout from Change Healthcare, that fundamental vulnerability to regulation, plus competition governance concerns.
So the core question for you, the listener, looking at all this material is, are UNH's current troubles temporary cyclical things they can overcome? Or do they signal deeper, maybe structural issues in their model or the market?
Exactly. Bulls think temporary, bears worry it's more systemic. Will they get back to that 13-16% growth path, or are these headwinds going to permanently reset expectations? And the performance of Optum, particularly Optum Insight post-cyber attack and Optum Health, amidst the MA scrutiny that feels like a critical factor in which way this breaks.
Okay, that wraps up our deep dive into UnitedHealth Group, UNH. We've gone through the dual structure, the market position, the financials that contrast between strong revenue and recent profit pressure, the valuation, the significant risks, and this really tumultuous recent period.
Yeah, we've seen a company with undeniable strengths, that unique integrated model, big growth ambitions led by Optum, but facing this really complex storm of headwinds right now. Costs, regulations, cyber threats, leadership changes. It's a lot.
So as you think about everything we've covered, the strengths, the risks, the recent chaos, and how much UNH relies on Optum for the future, here's a final thought to ponder. Given Optum's central role in healthcare data and tech integration, how might the long-term consequences of the Change Healthcare cyber attack or the outcome of these government probes reshape not just UNH, but maybe the whole approach to technology, data sharing, and cybersecurity across the entire U.S. healthcare system? What kind of ripple effects could this have?